Hi, this is John Kattar. I'm a professional investor. In a previous video, I mentioned the importance of segmental reporting. Some of you have asked for more. What do I actually want companies to report? Let's start by thinking about what I'm trying to do here. I want to build a model of your business to figure out not just what I think it will earn in the future, but to understand how sensitive my forecast might be to key variables. In other words, to get a sense of how risky my estimates might be if things don't pan out as I expect. The only way to do that is to split the company down into its primary business lines and to look at the growth prospects and potential risks for each. Now, I can hear some of you groaning right now. He wants each and every business to be reported separately, preferably with a full set of primaries. Well, okay. If any of you really want to do that, I certainly wouldn't complain. But being practical about it, that's really not what I'm looking for. What I would like are two things. First, in terms of how you segment your business, I need your various operations to be grouped according to what drives their business. As I said earlier, I want to be able to flex my assumptions in order to test my forecasts. That only makes sense if similar activities are grouped together. It also only works if your geographic splits make sense. Lumping together retail in the US with retail in China is not overly helpful. They are exposed to very different dynamics. Similarly, a segment that spans cheese making with shoe production is not sensible. You treat the two very differently internally. Well, so do I. The other thing I need is enough data to have a reasonable chance at forecasting each segment's key lines. That means a mix of financial and non-financial information. On the financial side, I need things like revenues, of course, but also gross and operating margins and operating cash flow. The non-financial, along with management commentary, should help me figure out the sustainability of current performance, the kind of growth that you are seeing in the industry and how your share of the market is changing. I need some understanding of cost trends. So how is that segment being impacted by changing IT or commodity costs? And of course, you're thinking on CapEx requirements and capital management, divestitures, square footage expansion, or whatever. Now, that sounds like a lot, but good corporate reporters seem to have a knack for pulling all the key stats together in a few well-presented tables, along with pithy, supportive narrative. It's a little work, but not too horrible. And why should you go to the trouble of doing this? Well, it boils down to my confidence in your investment case. Basically, the more investors have to guess, the more likely it is that your earnings will miss estimates. If you report higher numbers than expected, that's great. But if you disappoint, well, all I can say is that confidence and trust are things that are much more easily shattered than rebuilt.